Hello, ladies and gentlemen. This is Greg Mikulowski back from the Traders Expo in Pasadena. For those people who listen to FX Street and who are maybe perhaps at that expo and either saw me speak or met me during that show, it was a pleasure. I'm glad I was able to do it, but I'm happy to be back home in the seat. Taking a look at what may happen in the current market, given the technicals that maybe that are driving the price either higher or lower. So let's take a look at the euro. It's continued to correct higher in early trading here today. So let's take a look at some of our technicals, starting off with the daily chart, if we will. As you can see here, since really the last move to the downside. I mean, this trend for the euro has been going on for for a little bit, a while. Really, November the market peaked at around the 150 to 151 area, and it's been in a trend to the downside. Now, this last move to the downside is a sort of in between, a little bit of a channel. You can kind of put channel lines in there. In fact, if I want to put a trend line here off of this high right here through these lows right here, we broke through that trend line on Friday, or tried to kind of close right on that trend line today with the move higher. We've seen the market break above that trend line, and that's positive for the euro versus US dollar. We're also above the 2131 level, and the significance of that level, if I actually go to the weekly chart and take a look at the, I'm going to get rid of these lines right here and get rid of this Fibonacci here. But if you go back in time and actually I'm going to put it on a monthly chart, and you look at the lows for the euro, which came in at 82.25. This is an all-time low, and the high that came in at 160.37. The 121.31 level is actually the 50% retracement level. So that's of significance here. So let's move this line down to 31 here. Get it exactly. I don't think I can, but we get it back, get it as close as we can to that 31 level, really the 33 level. So being above that level is somewhat positive for the euro versus US dollar on a daily basis. So that may have helped drive some of the move that we saw here today. In addition to some favorable news over the weekend and some less concern about situations and probably some short covering in the euro, as the market is off the hourly chart, has been contained by this top trend line. I just connected this highs with these highs, these highs, these highs, these highs, and if I zoom in, you can see that a little bit better, how these different highs have pretty much contained the top side. And so I'm going to use that level as a key support level here. Now that we're above that level, we're currently trading at 122.50. The other thing of significance is a 61.8 coming at 122.34. So all of that. Those two levels, the trend line was at 33 and the 61.8 at 34. The 61.8, by the way, is from this high here on May 28th to the low here. That's the most recent high in the euro versus US dollar. So this support level, or this level, is going to be my key level to watch here in today's trading range. Now the 122.62 level, I have a line in there that corresponds with some the high for the day, and also some levels where the market in the past has used as either resistance or support. And if I go back in time and just watch this 62 level, as I scroll back in time, it was sort of a high level here, which started to move to the downside. We had some highs here, we had some highs here. When we broke through here, we had some support here. We had some support here, support here. These are what I call remembered lines. Started to move to the upside off of that level, and held some support against that level. Found some support against that level, and used it as a point to move off of over here. So all these happen at the 62 level, and that's why the market tends to find these levels and pause. So right now, as the market trades above this trend line, above the 61.8% retracement around the 122.34 level, we still have resistance at 122.62, which we're going to have to get through on the top side, that area, in order to propel that market higher. So right now, support 34, resistance at 62. What's the 5-minute chart telling us? This chart is showing that we do have a nice little floor here at the 121.67 area. That representative, if you take the Wasn't even close to the Fibonacci retracement level of that last move to the upside when the market stalled here. But you get these trend type moves, and then you get non-trend type moves. Had a nice little floor. Although we broke this blue line, this is our 100 bar moving average, which signals a negative bias. The market held that support, or could not really develop any momentum below the 67 level. And in fact, when the market dipped below that level, it came right back. That gave the bulls a little bit more confidence. And at this point right here, the market decided to take the market to the upside here. So from a technical perspective, once again, we're going to have some support at the 34 level. We're going to have resistance at that 62 level. If we can get through those levels, then we should see higher targets for the euro versus US dollar. Where can we go? My other key level on the top side is in between this 123.25 to 43 level. A lot of remember prices at that level. So put a couple horizontal lines in your chart. Put the to remind you that there's going to be resistance at that level, and if it gets up there, look for some profit taking up at that area. If we break through that level, then we should see higher levels in the euro versus US dollar. If we break through the 34 level, look for further corrective measures moves to the downside. With a move toward probably the midpoint of that trading range, which comes in at 121.65. What's the significance of that as well? Nice little support level here at 65 level. So watch this level right here. This is going to be the key for the euro versus US dollar. This is Greg Mikulowski taking a look at the euro versus US dollar from a technical perspective for FX Street. Thank you very much.